Okay, welcome everybody to our members meetup for Tuesday, July 14th. What I want to do today is go over the overall market, go through our walkthrough, take a look at the latest trades. And then what I'm going to do is spend some time talking about the psychology of trading and how you can benefit from knowing how to deal with losing trades and keep your emotions in check and all that kind of good stuff. So I got a little presentation, take about 10 minutes, I guess. But first I want to go over the overall market and our latest trades. First of all, you can see that, of course, the overall market, we always look at the SPY, Standard & Poor's 500, and I'm looking at, of course, the 5 and the 8, the 5 being the green and the 8 being the gold. Without knowing anything else, I can look at this chart and I can tell you whether the market is in a strong uptrend, a weak uptrend, a sideways trend, a downtrend, whether it's bullish, whether it's bearish. So a lot can be taken away from this overall market view. And I think this is the way you should always start your trading, is to get a feel for how the overall market is doing. Now, recently, the NASDAQ has been way outperforming the SPX, but they tend to come together after a while. And you know, the biggest reason is that the NASDAQ's been outperforming is because they've got some big boys in there like Amazon, and Amazon has just been going crazy. You can see just recently it's been taking a little bit of a tumble, but we kind of realized that that's going to be inevitable because it's all the way up at the +2 on the regression channel. A lot of these tools, if we just utilize them and look at it, you can get a feel for where the market is, what you should be doing, without listening to any talking heads or anything like that. Do your own trading. Okay, so the first of all, on the Standard & Poor's 500, you can see that the 5 is over the 8. Now, yesterday was a kind of a weird day. It started out and the market opened all the way up here, which was plus a bunch. This is where it opened, and then it moved up here, it moved up here, it moved up here, it moved up here. And then I think it was right around noontime is when all of a sudden it just went whoosh. It just dropped like a rock. So I don't know why. I dare say I never go to CNBC or NBC or any of those to find out why, because they'll have a reason. They always have a reason, whether it's the right reason or the wrong reason. I thought maybe, oil prices had dropped. Well, find out that oil prices had increased. So don't really know what happened here. What I do know is there was a boatload of sell that went in there and dropped the market down. Now, so you look at this and you say, well, did the 5 cross below the 8? No, it did not. Did it almost cross below the 8? No, it did not. So what do? Nothing. We have our portfolio. We just stay with our portfolio. When the 5 drops below the 8, that's when you might think about hedging or getting out. If you're just in a couple stocks, or maybe the SPX or or the SPY or something like that, you might choose to just jump out. But if you're in a very large portfolio, hedging is the way to do it. So you know, you look at this day and you go, in the morning you have euphoria, in the afternoon you have depression. Well, that kind of trading will kill you. That kind of trading will destroy you, because the market is random. It is totally random. And that's why we have to always be controlling our emotions. And that's basically what I want to talk about. The first thing I want to do is just go through our walkthrough. Our walkthrough, of course, you know, we look basically is when a stock is trending and we have a pullback and it makes a measured move, or the 5 crosses the 8, that's a secondary entry. The first entry is when it's been overbought or oversold. And of course, we know we've got exits. As soon as we know we're into a trade, we know when we're going to exit. So there should be no anxiety about putting on a trade. We don't have control over that. Okay? And the best thing to do is execute the trade. And when it goes against us, get out. And when it goes with us and it's gone for a long time, it's time to take profits, get out with a profit. Okay? So this walkthrough is a protection against your emotional state of mind. And that emotional state of mind is a killer in the stock market. Okay, let's take a peek at our trade that we put on the other day, and that was the SPX weekly. Now, the SPX weekly had come down to the -1, and that was a measured move down to the 127. Okay, and then it had a strong move to the upside. But right here was it actually made a little bit of a measured move at the end here on I think that was, when was that? Was that Friday, I think? And then yesterday it opened up strong. So that is a measured move. So I always look at the left-hand chart as my quote-unquote grounding chart. Well, what does that mean? Well, that kind of gives me a flavor for where has the SPX been. Well, it's going between the -1 and the +1, and you know, it has made a couple of major moves along here, and at this point in time it broke out of a channel and it's pushing up. So then I come over to the shorter term, which is the 10-day 30-minute chart, and that's the one on the right, is the one I always trade by. And it gave a measured move. So shortly yesterday, after the market opened, I sent out a text and email alert saying, let's go ahead and put in a bull put. So how do we do that? Of course, you go over to the trade tab, and we want to go out about 10 days. Yesterday was 9 days, so I chose the 22 July, which I think is next Wednesday. And then you look at this and you say, okay, at that point in time, it was trading at 32.10. And according to the applied volatility, it had a plus or minus, when I was looking at it yesterday, a 98-point move, plus or minus. Well, if we're looking at a bull put, we want to subtract that So if we did it now, basically what you would be doing is taking 3163 and subtracting 107 from that, and that zeroes you in on the strike price to sell the option. And then because it's a weekly, we want to go out to the downside 5 points, and that's the one we're going to buy. Okay. And what's always interesting is this, using this technique. We're going with a very conservative trade, and usually it's between 0.1 and 0.3 on the delta. Actually, yesterday when I put it on, it was right around 0.221, something like that. The reason why it's a little higher today is because the market has gone against this. Okay, so we put that on for 80 cents. So let's go back to the chart. Now, all of a sudden, it has dropped like a rock. Okay. So what do we do? Nothing, because what we're looking for on the short term, we don't have the 5 and the 8 on the short term. We only look at measured moves. This is not made a measured move. This was just a drop, and we don't know why, but it had a big drop here. Okay. Now, so we just stay in. We're just staying in. If it comes up here and it kind of sits around here and then it comes back down and it makes a measured move right here, we are out. We are out. All right. That's the rules. And so you look at that and you say, well, okay, I know when to get in. I know when to get out. Why worry? Why worry? Because this is a rock solid strategy. Been trading it for years. It works. It's profitable. Why worry about any given trade? What you want to do is execute the trades. All right. The other one that we're in right now is Hershey. And Hershey is quite strong today. And the 5 is still below the 8. But look at, when we put on our bear call here on Hershey, look how far out we are above the short-term channel. So yeah, this indeed is a pretty strong day. The 5 is still below the 8. We just want to hold on to that. Now, one of the things I'm thinking about with Hershey, and you might consider this, is that we have earnings coming up on the 23rd of July, not quite 2 weeks away. So, and we've made a nice profit on this. We got in, which is very interesting, because we got in on a measured move right here. We got in a day late, and it actually went against us. Then it went with us. Now it's going against us a little bit, and we're making money. Okay, that's the nice thing about the vertical spreads. One of the things we could consider as we get closer to earnings, don't want to do it just yet, is protect ourselves by maybe putting on an iron condor for a couple days, maybe one day before earnings, and seeing what happens, and seeing if it continues to drop, we just take it off and we let this one continue to go on. But the turning is into an iron condor, and we've talked about this before. We've never really done it, so but I'm considering doing it right now. And why not? Because we've made a profit here. Why not do that? So what we would do on Hershey is come up to the trade tab. We've got the 21 August. And we would say, okay, It's sitting at 120, let's call it 130. And to put on a bull put, we want to subtract 11. Okay, so we want to subtract 11, and that's going to take us down to 119. Okay, so maybe what I want to do is I want to sell the 120 and buy the 110 put. Okay, and for that I'm going to get about $1.15, something like that. So I'm going to go ahead and do that. We're going to sell vertical. We want to have the same quantity as we had when we first put on the trade, and we want to have it 10 points apart. So we want to sell that. We want to buy the 110. Get a healthy $1.45 for that. Confirm and send. Now, I probably don't want to do that yet. Because we're still about 2 weeks away from earnings. So I kind of want to let it go. And we'll talk about this again next week, which would be a nice thing to do around that time. The other thing we're going to talk about next week is putting on iron condors because of earnings around Amazon and Google. Okay, so let's hold off on this. I just wanted to go over how we're going to do that until next week when we get a chance to, we'll call it our earnings iron condor week. All right, so at this point in time, I just want to delete that and get back to our chart. Okay, all righty. So any questions on that at all before I get into talking about the psychology of trading? Okay, good deal. Let me talk about 10 minutes about the psychology of trading. I think you'll find this very helpful, and hopefully you'll utilize this in your trading. Because what I found out many years ago was that in order to be a truly successful trader, you needed to have a balance. You needed to have a balance between your rock solid strategy and you had to have command of the gray matter between your ears, and that's what I call psychology. And be quite honest with you, it's about a 50-50 split. And what I want to do is I want to refer to a book that was written by Randy Howe, and came across this when Steve Schroeder recommended this to me about a year and a half ago, I guess, Steve. And of course, Steve has always been very interested in the psychology, like myself. It's very hard, very easy to read, and it's something to say, oh, okay, yeah, that makes sense. That makes sense. Very, very difficult to do. Very difficult to do. Now, I've been trading for a long, long, long time, and I still, to this day, will fall under the trading psychology trap and let the market control my emotions. And when it does that, boom, I get bit. I get bit. Still to this day, it's not intuitive. It's not intuitive. Trade the Market with an Edge by Randy Howe. What does it take to really gain competence as a live, successful trader? Well, here's the first thing. Success in another endeavor means nothing in trading. And that's kind of tough, because you can be a very successful engineer. You can be a very successful dentist. You can be a very successful brain surgeon, accountant, whatever. And it doesn't mean anything in trading, because engineers know that there are certain laws and equations that we can solve, and we know what the answer is, and we can test that, and we can look at the structure of a bridge and know that if we have the struts at a certain distance apart, we're going to be able to have a strong bridge. Okay, that's not true in trading. It's not true in trading. There's no equation. There's no sure thing in trading. There's no guarantees that the analysis we make will hold true. And that's the problem. Therein lies the problem. The needs of trading are simply different from anything else you've experienced thus far. The brain that evolution gave you has to be recalibrated to a new kind of mind, till a new kind of mind comes forward to meet these new challenges of trading. And what are the challenges? You must let go of control and the need to be right. And that is tough. I remember early on, I fell into this trap so hard. I did pretty good. But a couple times, the market went against me, and how dare the market go against me? I did my analysis. I needed to be right. How dare the market go against me? So I would put more money into the trade. It's going to turn out right, and I would lose, and finally I said, wow, this is a whole different game. It's a whole different game. And the first thing you have to do is recognize that is a fact. This is a whole different game. You have to let go of the illusion of control and stick with the entry and exit rules. As mechanical, the more and more you get to be a mechanical system where you know when to get in and you know when to get out, and you just do it religiously, the better off you're going to become. Now, in the morning, the first thing in the morning, I always study the market. When I'm calm and in a curious mode, usually I meditate a little bit. It's easy to be in a state of mind to accept probability. There's no risk involved, okay? And this is when I do my planning for the day. Uncertainty in the brain we inherited from our ancestors was linked to biological fear. Saber-toothed tigers coming after you. Get the heck out. That's uncertainty. Okay? This is the exact worst thing that could happen for a trader's mind. You, the trader, can suddenly see trades that are perfectly good setups, but full of uncertainty. Okay? And a lot of people get paralysis by analysis. Okay? They just can't pull the trigger. Well, we have rules in place, and when you see that happen, don't worry about the uncertainty of whether this is going to be a profitable trade or not, because if you pull the trigger and it goes the wrong way, we have rules to get out. If you pull the trigger and it's a profitable trade, don't pat yourself on the back. Just get out when it's time to take a profit and move on. You, the trader, can say, okay, I did that. How do you get the mind focused on the present moment? First of all, you have to notice this is happening. A lot of people just know it, they know it, but they're not willing to accept it. Second, learn to regulate your emotional nature. And that's why I have the walkthrough, and that's why I go through it every single time we get together. Because the more and more your strategy becomes mechanical as far as executing and exit the trade, the better you're going to be. Why do we get blindsided again and again? Well, we've got rules in place with Fibonacci's and moving against with measured moves to help us not to get blindsided again and again. In trading, the trader cannot control outcome. The trader's task is to take profits when targets are hit or take losses when the structure breaks down. That's it. That's all you have to do. Execute, execute, execute. If you're still inconsistent in the heat of the moment, you got to recognize that. And how do you recognize that? Well, you keep records. The real question for the lifeblood of the evolving trader is, are you making consistent money? Is your equity curve going up? If it's not going up, then there's something, you're doing something wrong. And maybe it's time to take a deep breath, get out, take a look at your trades, take a look at your journal, see what you might be doing wrong. Did I execute this trade correctly? Was that the signal? Was the signal correct? Why didn't I get in? Why did I get in? Did I get out at the right time? Okay, and only by having a journal will you get that. It is this openness to making and learning from mistakes that must be cultivated. That's gonna cause you to be a consistent winner. How to develop the discipline to stop impulse trading? Well, that's patience, and that's another hard one. That's another hard one. People have a need for action. I have so many people that when they first start out with me, they say, "Holy smokes, you only trade a market basket of 25 stocks. There's 7,500 public traded corporations out there. I want to trade them all. I want to be in the market. I want to slay the dragon." Whoops. That's going to cause failure. Whether it's over trading, overconfidence, or chasing trades, many traders experience a world of hurt when discipline fails and impulse short circuits and rational trading mind. The very urgency to act, to make things happen, becomes a destructive basis. Success in trading is built upon a learned bias to be patient. A lot of times you'll hear in members review I do on the nightly members review, Thursdays and Sundays, that I'm saying, hey, we're in earnings season. Alcoa, which I think is a big corporation that kind of starts earnings season, that they have earnings tomorrow at 4 o'clock after the market closes. I'm going to be watching CNBC. I want to see how Alcoa, what they say about earnings. It's kind of the beginning of earnings season, and it's a time for us to be patient and wait and see. And right now we don't really have any trades. There's a lot that are channeling and earnings is coming about, and it's time to be patient. It's time to be patient. Mastering the head game of trading. Stepping back out of trading for a moment allows you to see the problem in trading from a less cluttered observation point. And I do that every morning. Step back from your trading. Just take a look at it. Take a deep breath. The market's not open. Nothing's happening. It's your time to look at the market. What's going on? What should you be doing? Okay. And sometimes it's even good to get out of the market, take a deep breath and take a vacation, relax, do something else. Okay. Give yourself a break. The outcome of a trade cannot be controlled, but the mind can be organized to control its performance. That is the peak performance edge. Self-limiting beliefs that sabotage your trading performance. In trading, you can do everything right, and still be wrong. In trading, you can do everything right and still be wrong. Not true in physics and in engineering and in brain surgery. Very true in trading. In trading, you can do everything right and still be wrong. Trading is about the management of probability rather than controlling uncertainty. Under pressure, the mind reverts back to its most primitive beliefs about its capacity to manage uncertainty. I told you when we first started into this discussion, this still happens to me, and I've been doing this for many, many years. That's my brain that I inherited from my parents and grandparents and their grandparents and so on and so forth, all the way back to the caveman. You know, the brain that we have right now is not wired to accept uncertainty. Mastering the emotions of money and loss. Many traders do not recognize emotions as they trigger and suck the mind into a losing vortex. Your trading account will help you truly evaluate your capacity to control uncertainty. Okay, your trading account, and that's records again. Is your trading account going up? Is it going down? If it's going down, you might be having trouble controlling uncertainty. This is the challenge of trading, and the way you approach this challenge defines the future you create in the performance of your trading. The secret of breaking the code to successful trading under pressure. Unfortunately, after many years of struggle, most traders discover that the dream of sustained profitability remains a seductive mirage for them, and they stop. And that's probably a good thing, because this is, you know, a lot of people don't realize that this is 50% of trading is to handle this uncertainty. Trading knowledge is only as good as the emotional intelligence of the user, and that's the EI, and that's the different not controlling your brain, not controlling your emotions, but going with a very mechanical system. The one thing that you can control is the mind you bring to the performance of execution. Okay, a mechanical system, exit and entry rules, being patient, keeping records. This is the real edge in trading. This takes a while, and that's why a lot of times when people first start out, it's like, well, how, you know, I got it. I've listened to your YouTubes, and I've listened to all the master classes that you have out there, and I've listened to your members review and your members meetup, and I understand it. But I still can't do it. That's because the rock solid strategy is only 50% of the game. You have to manage yourself, and that's the other 50% of the game. Okay? Any questions on that? Steve, I see your hand is up. Let me unmute you here for a second. Got you, Steve.
Yeah, I'd like to make one comment on this controlling uncertainty.
Yes.
You cannot control uncertainty. All you can do is manage a probability. That's one thing that I fight with all the time. I said, you're managing probability, you're managing probability, you're managing probability. And I get into a trade and all of a sudden I'm trying to control the uncertainty, and you can't do that. You have no control over the uncertainty. All you can do is manage the probability. And that's what your training is showing us how to do.
And that's exactly right. And of course, if people don't know it, Steve is a trained engineer, and that's the engineers are sometimes the hardest people to get this across to. I myself am a mechanical engineer, and this is the psychology of trading. Is I had a biggest struggle with this, and until I really mastered this, it was just a constant struggle. I knew I could do it. But I kept, what do you want to say, sabotaging yourself? Because how do you handle uncertainty? I didn't know.
Well, it's not just the engineers, it's the accountants. It is anyone that has been trained to manage details learns either consciously or subconsciously that you do have some control. And you really don't have any control in trading. So your only recourse is to learn to manage the probability. And I get it. I can talk about this all day long. But when it comes to using it, that is a whole different story.
Exactly right, Steve. Exactly
That's
right.
it. I'm gonna step down from my little perch here before I get really cranked up.
That's good comments. Thank you very much. Fred, I see your hand is up. Yeah, let me unmute you. Fred, I can't. Attendee is self-muted. Attendee is self-muted and is muted by. Do you have yourself muted, Fred? I can't seem to unmute you. Can't seem to unmute you, Fred. If you wouldn't mind typing it in the question box, I would greatly appreciate that, and I will come back to it. Oh, Steve's got his hand up again. Steve?
Yes, Fred, if you're listening, if you will look at the top right part of your GoToWebinar, you have the arrow in a red box. If you look underneath that, when you are completely unmuted, that little speaker there should be green. Now, what happens now with GoToWebinar, it used to not do that. Sometimes now it comes up, you are self-muted. So put your cursor over that little round circle right underneath the red box with the arrow in it and click on it and unmute yourself. That happened to me last week and it drove me nuts trying to figure out what was wrong, but that's what's happening.
That's good, Steve, because I wondered why I couldn't get to you also. Let me see if that worked for Fred. Yeah, Fred's still self-muted, so
There I go.
There you go, Fred. How you doing today?
Yeah, I'm doing fine, but I've been blinking on that second little area for about the last 3 minutes, and it just now turned green.
There you go.
My particular, and Steve, thank you for that. There's a whole lot, as Dale knows, there's a whole lot I don't know about computers, and I just sort of hate computers. I'm sorry they were ever invented because I can't use them as well as other people. But I wanted to comment on one of the things you were talking about. The hardest thing I have done and try to do is journaling. Keep a journal of your trades. And I found that, let's say we were going to buy a spread on Amazon. Well, I found out that I was having a half page of notes on particular things. And I said, this has got to be wrong. This way of journaling has to be wrong. So I became very lax on journaling. And Unfortunately, I'm still very lax on journaling because I tend to put down too much. Why don't you, Dale, go over take any trade you've had or one or two and say, what did you say in your journal about that particular trade from beginning to end? Can you do that?
I can easily do that, Fred. And you know, a lot of it goes back to the walkthrough, and I will say this trade was executed on a measured move above a certain point. It went against me, and the 5 crossed below the 8, and I failed to recognize that and stayed in a little bit longer and ended up losing. So, and it seems to me that I tend to journal more about losers than I do the winners. I guess because I feel that that's where I learn by doing that. But if you look at the format of the walkthrough of how you execute the trade and how you get out, and if you just focus on those steps, did you do it correctly? Did you not do it correctly?
See,
you don't need volumes. You just need a couple tidbits around that.
yeah. In my career, I was in life insurance, estate planning, and retirement planning for individuals and companies. And so I tend to put down amounts. Now, what I'm hearing you say, you're not putting down, well, 3 days after the trade, it went to 272.3, and then it came down the next day. So in the amounts that I was putting down, you didn't mention an amount. So maybe
No.
that was where I was getting into too much volume.
Well, that's an very interesting point, Fred, because in my mind, the trade is only over when you exit.
Yeah.
It starts when you get in, and it ends when you either take a profit or take a loss. What happens in between has no bearing. That's the market doing its thing. How did I react to the exit for a loss or an exit with a profit?
Okay, I see now.
Okay.
You know what you're telling me? That I better start journaling again. Yeah, Jim, you. Okay, thank you.
You're welcome, Fred. Hey, listen, I'm gonna I want to go over my YouTube and make sure you understand that. So I might be unmuting you here shortly. Let's see, Joseph, is it time to exit the Hershey Bear call? I don't know if you were here right at the beginning, Joseph, but I was talking about that what we might possibly do with Hershey is, as it gets closer to earnings, which is July 23rd, we might put on a bull put and have an iron condor surrounding this. Is it time to exit this? No, it's not, because let me go ahead and take a peek here. We'll maximize this sell and blow this up and see that it's just barely crossing over the 5 is just barely crossing over the 8. Now, I'm not too worried about this, and I'm going to let this go because we're still profitable, you know. And sometimes when we're still profitable, I do not jump immediately to exit a trade like this. So if anything, Joseph, I'm not looking to exit Hershey right now. I'm looking to possibly put on an iron condor as we get closer to earnings. Okay. Okay. Let me just go over real quick, because Fred had some problems with the YouTube, and let me just walk through this one more time. If you just come up here and do Dale Brethauer, that's my YouTube channel. You click on the YouTube channel, and you see, first of all, you see you only see 6 up here. Okay, Fred, I think you were saying you only saw 6 up here. Well, if you just come over to videos and click on videos, there you go. You see them all. You see them all. And I think this is the one you were interested in getting to. If you then when you get down here and you click on this guy, whoops, I don't want to start it. I don't want to start it. Let me go back. Let me go back here to it's this part 4 that has all the chart setups. Okay, and if you go into here underneath, let me see if I can do this. I don't want to do that either. There'll be a description underneath this YouTube, Fred, and it shows all the different parts to this 12-part series. Okay, that's the only one that has 12 parts. There are 33 videos in here that you can just take a peek at. Okay, but the biggest thing is to just click on videos and then you can see them all. Okay. All righty. Okay, so got it, Fred?
Yeah, I think that I misunderstood when you were talking last Tuesday about it. I was thinking you mentioned a couple of weeks before that somebody was having trouble with their charts. They had to set up their charts each time, and you said they had to be keyed and so forth.
Yeah.
I was thinking that when you said how to set up your charts, I thought you were really talking from the standpoint of somebody that was brand new, that wasn't used to listening to you and didn't even know how to set up a watch list, didn't even know how to add stocks and delete stocks and this, that, and the other. But I don't think that's what you meant by setting up your charts. And I thought it would be helpful if somebody is brand new, that if there is somewhere in all of those YouTubes that you have that you say, yeah, you can go to number 12 and find out how to set up a watch list.
Yep, part 4.
Okay, see, I didn't know that. So I'll examine all those and I'll journal all of what they all have in there, and I'll listen and watch the ones that I feel will be helpful.
Excellent.
Thank you.
Yeah, sure, Fred. The other thing you can do is, I know you don't particularly like computers, but you can once you get to the description, I've got a list of all the 12 videos that are on that playlist. You can copy that and paste it somewhere, or you can journal and write them down. The other thing I was answering the question was this person set up their charts correct, but then wanted to know how to get them so that they all synchronize together. And that was just a matter of coming up here and linking them so that they do all go together. Okay. All righty. We've got some time for some more questions. If anybody else would like to ask a question, you can either type it in the question box or raise your hand. Okay, Bill wants to take a peek at PFE. Okay. Yeah, this is an interesting one. Bill, I see it came down here as an outlier. It came back up strong, then has since come back down here to the -1, and just recently is moving back up. It has made a measured move right there. The 5 is over the 8. It made a measured move right here. It's a cheap stock. Pfizer's only $35 a share. So I would not suggest, Bill, buying options on Pfizer, but buying shares directly. Okay. I would buy shares directly on Pfizer. Now, the other thing I would look at is when is Pfizer's earnings? Because if, okay, and that's exactly what you did, Bill, and that's good. That's good. The other thing I was going to suggest is if they have their earnings right around the corner, well, we can get a rough idea right here. The last earnings they had was on April 28th, so probably sometime around July 28th or in about 2 weeks, they're going to have earnings again. It appears like they're doing pretty good, and if you bought some shares in there, that's what I would have done rather than gotten an option. Just be careful when it comes around earnings. Be watching it closely. Okay. Joseph says, how do I know when my credit spread is profitable? Well, Joseph, if you go to the monitor tab, the monitor tab will tell you everything. Okay. And all you have to do is, okay, we've got Hershey right now, and Hershey is profitable at $225 based on 10 contracts. So you come over here and you see, well, how many contracts did I buy? If you bought one contract, your buying power effect will be $1,000. Okay. It will tell you what the earnings are for the number of contracts you bought. Okay. This column tells you the price, profit and loss for the day. This one tells you since it was open. If you right click here, and if you left click, and this is one thing about Thinkorswim that drives me crazy. Some things are left click, some things are left click, some things are right click, and you really, you just have to try either one. If you go over to profit and loss open, it's going to tell you that I first got into this trade on July 1st, and I got in by selling the 140 and buying the 150, and I got in for $1.30 worth of credit. Okay, and then it shows you where it's at now, right now. Okay, and because we're doing a credit spread, the one that we sold, you can see is making money. The one that we bought is losing money. But the total credit spread is making money. So the monitor tab can tell you everything at a glance, Joseph, on how your credit spread is doing. Okay? Any other questions? Jim says, click the arrow to the left of the symbol for the same info. And here again, if you right click, it's going to help you. There's your create a closing order. And if you left click, it's going to give you the same info. Okay, so there's the right and the left click. All right. Okay, that is it for today. Remember, next week will be our earnings Iron Condor week. So we'll be looking at setting up our Iron Condor for Amazon, Google, and if we're still in Hershey at that time, possibly putting on something on Hershey. In the meantime, we'll be watching the SPX to see if we want to stay in this trade or not. Right now we're down a little bit, but I'm okay with that. I'm okay with that. Okay. All right. I'll have this posted on the website usually about 3 o'clock this afternoon. The other thing I just want to always remind people is that if you have any questions, don't wait till next week. Send me an email and we'll answer that for you. And then if it makes sense, I'll bring it into the following members meetup. Okay. Okay. Good trading, everybody. Bye-bye now.